Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. Today we're going very deep into Nvidia, the most dominant player in AI and GPUs as of October 9th, 2025. We'll cover recent price action and technicals, the massive AI growth engine that powers Nvidia, recent strategic investments like the headline-grabbing $2 billion XAI partnership, financials, growth drivers, risks, valuation, and a long-term outlook. Sit tight, because this is your full Nvidia deep dive. Recent price action and market context. To start, Nvidia's stock recently made an all-time high around $190, but has pulled back a bit to roughly $187. A correction after a strong rally is healthy and expected. Support at the 50-day moving average around $178 is holding well, which is a positive sign. The stock boasts huge daily volume, around 15 million shares, indicating institutional confidence remains high despite short-lived volatility. Relative Strength Index at current levels shows it's neither overbought nor oversold right now, setting a foundation for resumption of gains. The macro AI growth story. Nvidia's long-term outlook is dominated by its role as the backbone hardware supplier for the exploding AI ecosystem. All major players in generative AI, from OpenAI to Google to xAI, rely intensively on Nvidia GPUs. The exponential increase in AI model sizes and compute requirements means demand for Nvidia chips will surge for years. Blackwell architecture, Nvidia's latest GPU generation, delivers significant performance and energy efficiency gains, securing Nvidia's competitive edge. Strategic investments and partnerships. Nvidia's $2 billion investment in Elon Musk's xAI startup last week is much more than a capital infusion. It's a strategic move, locking Nvidia GPUs at the heart of a next-generation AI platform. You're talking about 55,000 plus next-gen GPUs aimed at powering advanced AI at xAI's Memphis data center. This alone could translate to billions in hardware sales over multiple years. Nvidia's venture capital wing is broadly backing AI, robotics, healthcare startups, deepening its ecosystem and future-proofing growth. Deep financial metrics and valuation. Trailing 12-month revenue for Nvidia is roughly $35 billion, up about 50% year over year. Profit margins hold around 65%, an astounding figure for semiconductor manufacturing. Operating margins are near 43%, showcasing operational efficiency. EPS growth has been stellar, with expectations to maintain 20 to 25% CAGR in coming years. Nvidia trades at a trailing PE around 53, a premium justified by dominant market position and growth. P/E ratio suggests some valuation froth, but with significant runway for delivery. Competitive landscape and risks. AMD and Intel have increased investments in AI chips, closing gaps. Geopolitical tensions and supply chain vulnerabilities remain important headwinds. Valuation compression is a risk if AI growth slows or competitive pressure intensifies. Regulatory oversight on AI and chip exports creates uncertainties. Nonetheless, Nvidia's technological lead and ecosystem control are formidable moats. Market segments driving growth. Gaming GPUs, still a large revenue driver, with growth fueled by new GPU launches and new gaming titles. Revenue expected over 15 billion in gaming by 2026. Data center GPUs, the fastest growth segment, driven entirely by cloud providers and AI startups. This segment accounts for over 55% of revenue growth. Automotive and autonomous driving. Nvidia Drive platform adoption is growing but slower than data center growth. Long-term play with new AI-powered cars. Professional visualization. Enterprise software accelerators and design tools maintain steady growth. Technology leadership and ecosystem. Nvidia's CUDA platform remains unmatched. Developer ecosystem exceeds 2 million globally, vital for customer lock-in. Nvidia AI Enterprise Suite integrates hardware and software, increasing incremental revenue. Close partnership with Microsoft Azure, AWS, Google Cloud furthers market penetration. Future catalysts and innovation, Blackwell GPU ramp, expected full ramp by 2026 to sustain growth. Accelerated AI protocols, new software optimizations enhancing performance per watt, expansion in emerging sectors, edge AI, robotics, healthcare imaging, metaverse-related compute, venture capital stakes, investments in startups pushing new AI applications bolster future demand. Technical chart deep dive 50-day and 200-day averages provide strong baseline support. Volume spikes confirm institutional interest on dips. Momentum oscillators indicate healthy consolidation phase. Long-term uptrend intact since 2023 bottom. Analyst price targets and sentiment consensus targets remain near $210, $220. Analyst upgrades followed the XAI partnership news. Sell side remains broadly bullish, citing strategic investments. Investment summary: Nvidia remains a core long-term growth stock sitting at the fulcrum of the AI revolution. Near-term pullbacks create buying opportunities. Strong financials, technological leadership, and partnerships make it a rare tech giant poised to compound capital for years. Thanks for watching this detailed Nvidia update. Like, subscribe, and comment your thoughts or questions on Nvidia and AI investing. See you in the next growth stock deep dive. Would you like me to prepare an earnings preview or competitor analysis video next? Here is a 25-minute detailed professional video script for Nvidia stock analysis for October 9th, 2025, modeled in the style you requested. Hey everyone, welcome back to Research Investment. I'm Simo, your equity research analyst host. Today, we're diving deep into the Nvidia stock as of October 9th, 2025. Nvidia has been one of the strongest performers in tech, driven by its dominant position in AI-related chips. But recent weeks have seen some volatility, a modest pullback from all-time highs near $190 to about $187. What's going on? Is it a good buying opportunity or are risks mounting? I'll share my analysis based on the very latest data. Recent price and technical review. After surging into early October with huge momentum, Nvidia pulled back slightly to around $187. Support at the 50-day moving average near $178 held firm, and volume remains robust with over 15 million shares daily. Momentum indicators show consolidation, not a breakdown, signaling a healthy pause in a strong trend. Key resistance remains near the 190 all-time high. Breaking through decisively could launch the stock toward $200 and beyond. Massive AI growth driver. Nvidia remains the hardware infrastructure backbone powering nearly every major AI model in data centers worldwide. The exponential demand for compute infrastructure in generative AI, autonomous vehicles, robotics, and cloud gaming continues to drive chip sales. Blackwell architecture, Nvidia's latest GPU generation, widens the performance and energy efficiency gap, securing leadership for years to come. Strategic investments: 2BXAI deal. Nvidia's $2 billion investment in Elon Musk's AI startup XAI, announced last week, represents a deeper strategic stake in AI's future and guaranteed large GPU deployments. XAI plans to operate over 55,000 Blackwell GPUs at its Memphis data center. This could mean billions in hardware sales over multiple years beyond software licensing. Nvidia's broad venture capital portfolio in AI, robotics, and healthcare startups further extends its ecosystem and future-proof growth. Financial metrics. 12-month trailing revenue approaches $35 billion, up approximately 50% year over year. Gross margin maintains near 65%, showing strong leverage. Operating margin rebounds to roughly 43%, with EPS up strongly. Trailing P is about 53, reflecting premium for growth. PEG ratios are at a premium but justified by dominant positioning. Competitive landscape and risks competition from AMD, Intel, and emerging chip makers accelerates. Supply chain risk amid geopolitical tensions may affect capacity. High valuation leaves limited error margin. Regulatory risk related to AI and international trade persists. Segment and business model review. Gaming GPUs provide steady revenue above 15B projected. Data center AI chips drive explosive growth, over 55% contribution. Automotive and visualization segments provide growth diversification. Nvidia's CUDA software platform entrenchment and developer community lock-in remain unmatched competitive advantages. Technical chart deep dive. Strong technical base formed at key moving averages with momentum indicators poised for breakout. Volume patterns show institutional accumulation. Analyst sentiment and price targets, consensus price targets of $210, $221 reflect optimism, particularly after strategic AI investments. Sell-side commentary highlights consistent execution and healthy competitive positioning. Conclusion and investment outlook. Nvidia remains a growth juggernaut at the forefront of the AI hardware revolution. Recent pullbacks represent possible buying opportunities, not fundamental change. Strong financials, market leadership, and strategic partnerships make Nvidia a compelling long-term growth stock. Thanks for watching this detailed update on Nvidia. Please like, subscribe, and comment your questions or thoughts about Nvidia or AI investing. Stay tuned for post Q3 earnings and competitor analysis coming soon.